You know, it's interesting about Meta. Satori Fund founder and senior portfolio manager Dan Niles last November told us right here on the Claman Countdown that he was taking a long Meta position. He is now pairing that with another mega cap tech stock, but shorting it to offset that exposure. Niles' hedge fund not only beat the S&P and the Nasdaq's negative performances last year, his was up while the two indices, as you know, were down. I mean, I think the Nasdaq was down 33% last year. Niles is joining us now first on Fox Business. Okay, Dan, I'm guessing even with this EU snafu or situation, you still really like Meta. Why?
Well, I think when you look at it fundamentally, it's in probably the best position of all the big cap technology stocks when you look at it relative to its valuation. It's just above an S&P multiple of 19 times. Their AI-driven advertising called Advantage Plus is doing really well. And so they're gaining back a lot of momentum after the issues caused by the Apple privacy steps taken. And then finally, their product that competes with TikTok, which is called Reels, is doing incredibly well, especially as obviously there's a lot of pressure on TikTok and will that be allowed in the US? And so I think it's the best position of all the big names when you look at it across those metrics.
But now you're pairing it, because you're a long short hedge fund, with a short against one of the biggest names in technology. I'll let you reveal it, and then I really need to know why.
Yeah, so when Google reported, their stock went down the next day a little bit, not much. And we actually ended up buying it because our view was, well, they did much better than people thought on advertising. And all this talk about Microsoft gaining share against Google and Google being behind in AI, just makes no sense. Google has more training data than anyone on the planet. They're going to be just fine. And so we bought it. But as the stock continued to go up, we had more and more concerns about advertising demand in general. You probably remember Disney, how awful the advertising numbers were there. Paramount, same situation. And so with the online market, we think you're going to see more pressure spreading to the online space as we go throughout this year. That'll affect both Meta and Google, but Meta has things, as we talked about, with Advantage Plus and Reels to help offset that, where Google doesn't. They both traded about the same valuation. And remember, we're a hedge fund, so I wouldn't be short Google naked, but when it's paired against Facebook, where we have a much bigger position in Facebook on the long side, this helps hedge out some of the advertising risk that you're inherently taking on being long Facebook.
Well, the big key word right now is artificial intelligence. There was news in the hour before hours that Bill Gates is speaking at a Goldman Sachs conference, and he said that the race in technology now, the brutal survivor type of race, is who gets the best AI engine, who gets to it first. And he said whoever does will basically replace search engines, because that's what artificial intelligence will do. Now, both Alphabet and Microsoft have big operations in artificial intelligence. You don't hear that much about it coming out of Meta, do you?
Well, remember, with Meta, it's more about helping to optimize advertising. So where should your ad dollars go? And so their AI really helps with optimizing where those ad dollars go in the system. And so for us, we're looking at different names. We're looking at semiconductor names. Obviously, NVIDIA is the one that everybody brings up, but we like Intel as well, where we look at Intel, and you're going to need a lot more cores in each one of your server microprocessors to be able to, do generative AI. And everybody hates Intel, which is great, unlike the optimism around an AMD or an NVIDIA. And so there are a lot of different ways to try to get to this. I mean, I think the one thing you have to remember, though, Liz, is that Bill Gates also said, many years ago, new technology is overhyped short term and underhyped long term. Right now, the hype around AI is pretty severe. And the way I think about it is, if you think about 2000, 2001, the internet was, obviously kept growing, was much bigger, didn't stop the NASDAQ from going down 78%. So a lot of these stocks, I mean, we've had 7 stocks in the S&P 500 that have driven all the gains for the year, driven by optimism around AI in general. The rest of the S&P is down for the year.
Right.
And so, I'm getting a little concerned that this hype is going to overrun reality in the near term, but long term, absolutely, this is just going to change the entire landscape as we move forward.
In fact,
over the
on
next
Friday,
5 to 10 years.
our guest David Kugla had said it's now not FANG, but Manon, Microsoft, Apple, you know, these sort of strung together initials of all of it. Let me just tell you what is hitting the tape right now. TikTok has filed a federal lawsuit against against the state of Montana in a court filing. So obviously Montana has banned the use of TikTok. Now, that's a whole ball of wax that you start to put together, or an entire jar of scorpions you let out when a state is banning a website kind of thing. So how do you think that affects Meta if this is an ACLU issue and a free speech and let me search what I want issue, and TikTok survives or at least drags out its ability to live here in the United States?
Well, remember, this really gained some momentum when the government banned TikTok on a lot of government devices. And so I find it really odd that the government, takes the position of, well, we don't want it on any of our devices, but we're okay with the citizens in the U.S. having it on theirs. Like, to me, that makes absolutely no sense. And so I think from a standpoint of, if you think about this longer term, this is going to continue to be an overhang for TikTok and a positive, I think, for Meta going forward. But even before this really started to pick up momentum, you go back to the September quarter of last year when the stock got hammered down in the low 90s. And they had very strong momentum against TikTok back then. That's why we ended up buying it, in addition to, CapEx expectations that we thought would be cut later. And that's just continued. The momentum in that product is continuing to do well. And at a market multiple, unlike a lot of these generative AI plays that are trading at, much higher than market multiples,
yes, true. This
is one where you kind of get a benefit in the background. And so that's why I think it makes sense to stay involved. And the momentum against TikTok, I think, will continue.
And the word metaverse may become just like NFTs, which not a lot of people are talking about anymore. Dan, great to have you. Thank you very much. Took the position in Meta back in November. It's up 107% year to date. We'll see you next time. Thank you, Dan.
Thanks, Liz.